Ashutosh, good afternoon and thank you for joining us. It's been a stellar showing as far as your margins are concerned. Can you tell us what led to this growth, and by when do you think you could get to the margins that some of your peers have, the likes of 15-16%? Can we expect something within this financial year itself?
Good afternoon for having me. The 2017 fiscal has started well for us with operating revenue, as you said, going up by almost close to 20%. Now, this is a mix of as our hospitals go into their maturity profile. As you know, the large number of our beds were in less than 5 years of maturity basket. So they gradually, as the hospitals start maturing, the ARPOB starts going up, the complexity of cases start going up, the occupancy starts going up. And these are some of the factors which have led to a good growth. However, you have to be cautious that the healthcare business is slightly cyclical, and you have to look at the results more on an annualized basis, because typically the third quarter is a holiday period, and that usually gets slightly suppressed. However, we expect the trend to continue.
Okay, Mr. Raghuvanshi, good afternoon. So looking at your guidance of setting up 973 new beds across 3 locations over 2 to 3 years, can you break it year-wise? I mean, is there any target that you have for FY17, or is this a long-dated target that you have?
Yeah. Anuj, we have already, we are in the final stages of commissioning our children's hospital, which is going to be a unique offering in Mumbai within next 3 to 4 months. So this hospital would have 297 beds outlet, and this is going to happen within this financial year. However, the other projects such as Lucknow and Bhubaneswar are over the next 24 months. And as we had already stated earlier, the Bhubaneswar is slightly delayed because we are in the process of discussing an alternative site for the property.
Okay, so can you give us a number? Earlier you had guided that there would be almost 973 new beds over the next 2 to 3 years. But can you give us a slightly closer timeline? In the next 1 year, how many new beds would you be adding?
So within this financial year, we expect 297 beds to be added as a new hospital. Plus, within the existing hospitals, namely the Health City in Bangalore, the multi-speciality hospital over there, the cancer center, would be adding additional 35 beds within this financial year. The rest of the beds, which is Lucknow, Bhubaneswar, will come in 12 to 24 months.
Okay. So this Mumbai Pediatric Hospital, how much is it going to contribute going forward?
Since this is going to be a greenfield hospital, we expect it to take the normal trajectory. The occupancies in the initial stages of most hospitals remain in the range of 15 to 20%. However, we expect ARPOBs to be reasonably good here because of the location, and we expect the ARPOBs to be in line with what our group ARPOBs are, and occupancy to be in the range of about 20% within this fiscal year. So we should have at least 1 full quarter coming from this hospital.
Okay, well, the street is getting very excited with all the comments that you're making, Mr. Raghuvanshi, because the stock has now suddenly spiked up and it's at the high point. Just in the last 5 minutes, the stock has moved to an 11% gain. I just want to dwell a little more on your margin performance, because that is the big trigger for the company here on. You did mention that the upward trajectory of the margins will continue, but can you give us a bit more granular detail? By when do you think you would get to, say, 13-14% margins? Would it be by the end of this fiscal itself?
See, if you look at the hospitals which are over 5 years, I think we are currently running at an ARPOB of about 7.6 million with occupancy about 60%, and the EBITDA margins here are about 24.4%, which is in line with the industry. So we expect the other beds, which is the 3 to 5 years category, also to go towards the same in next 2 years. These hospitals currently are giving about 10% of EBITDA.
Okay.
So we expect that at least 2 more hospitals would show maturity within this fiscal.
Okay, that's interesting. The other bit which stands out from your numbers is that your finance costs have come down even further. Your debt equity is already quite healthy, but the finance costs were lower at 5.5 crore versus 8.8 crore. For next few quarters, does it remain at these levels?
It is likely to remain at that level. It's a function of cash flow situation, which has improved dramatically because as the facilities are going into their maturity cycle, that is one reason. And other than that, of course, we had the conversion of 100 crores pre-IPO of the CDC, which was a debt instrument earlier, which was a convertible instrument, and that was done pre-IPO. So that has overall in net reduced the thing, and the finance cost has, as a result of that, gone down. It's likely to remain within that zone.
Okay, all the best, Mr. Raghuvanshi. Thank you for stopping by and giving us an outlook on your business. That is clearly the stock of the moment. Look at that, 11% higher now on Narayana Hrudayalaya. And just take one look at the volumes as well. Volumes have been spiking up significantly. Mr. Tulsian, I wanted your view on this.